So these areas of interest come in at roughly around $2.06 to $2, and roughly about $1.90 to about $1.84. What is going on? Welcome back to another CYPRX video breakdown. No hopium, no hype, no noise, just clear levels mapped out before they unfold when it matters most. In today's video breakdown, we're going to be giving you guys a thorough XRP technical analysis update. If you guys have enjoyed up to this point, do us a favor, smash that thumbs up button and subscribe. The recent update that we gave you guys, that recording that you guys just saw, we posted just a few days ago over here on X. Hopefully you guys were able to catch a glimpse of that, as now those $2 targets have been met today. Unfortunately, right now, I'm currently in the process of traveling. However, I did mention to you guys that I would make an attempt to get some updates out to you guys if these levels were met in the previous video from roughly about 2 days ago, and those targets came into fruition faster than I had anticipated. So that pullback down into $2 has now been met. I want to just remind you guys that I am personally looking at these opportunities as holiday discounts in a sense. This is when patience pays here, I said. Only problem people should be having, in my personal opinion, is figuring out what blue chips to buy. This is where $1 turns to 10, 10 turns to 100, 100 turns to 1,000, so on and so forth. Don't let the amount of capital you do or do not have discourage you. Every dollar counts. Bottom line is they will debase our fiat currencies and crypto will rise from the ashes. And now is the time to focus. So hitting you guys off with that motivational post and taking a look at the fundamental backdrop and making sure that as our audience here at CYPRX, you all are not paying attention to this type of distraction. Unfortunately, this guy's post is 100% inaccurate. And I want to make it very clear for you guys watching today's video breakdown why the market continued to sell off. Looking at the views here, over 1 million impressions on this post versus a post that actually educates people with only 2,000 impressions. And you mean to tell me that the algorithm isn't rigged?
When software ate the world, it was good. And then software plus AI metastasized into essentially a weapon of mass manipulation that has been available to different kind of actors to manipulate the population for political purposes, for geopolitical conflict purposes. And
you guys remember in this previous video breakdown where I mentioned my fellow XRP holders, the BIS has confirmed this is not going to be good, a ticking time bomb. And in this particular video, with over 53,000 impressions, we talked about the possibility of the yen strengthening, unwind of the yen carry trades, and how all of that would lead to continued risk off sell pressure, especially in crypto. So if you guys didn't check this video out, make sure that you do so. But that's going to play a key role in today's video. So coming over here, this individual here, again, I'm not trying to bash this person, but this is just the type of nonsense that you want to avoid. Today's dump makes absolutely no sense. Bitcoin dumped 5,000 in 3 hours, $210 billion wiped from the crypto market in a single day, and nearly 700 million liquidated in leverage positions. And the craziest part, there was not a single negative news headline today. No FUD, no Trump tweet, no stock market crash, no tariffs or bad earnings. This is crazy right here, okay? Because this just goes to show that people are not reading what needs to be read, guys and gals. And we're going to give you guys the full update today in this video breakdown. So this is not to bash this person. We are here in an attempt to just properly educate individuals and make sure that you guys are not steering your attention in this direction. There was no logical explanation for this. This feels like pure manipulation dumps to wipe out leverage yet again. And look at this, 1.3 million views. So in today's video, we're going to show you guys why there was continued sell pressure in crypto markets. And then we're also going to show you guys some updated levels that I'm personally taking a look at. Now, I won't be able to do a full technical analysis breakdown. I'm just going to give you guys a visual on some updated analysis because I am in travel mode right now. So I'm literally recording off of my travel kit. Nonetheless, I want to make sure that you guys stay up to date and in the loop. So in previous weeks, we warned stronger yen would be a contributing factor to sell pressure on risk assets like crypto in the coming days ahead, XRP included. Now, again, I'm not trying to paint a bearish picture. I'm still super bullish on crypto overall, but we need to understand that short-term sentiment can flip risk off and the markets will react to that sentiment. We'll get into how we could possibly stage a recovery heading into December and into 2026 in the fundamental report here in just a second. Markets over the last 24 hours, mind you, I wrote this 11 hours ago, were weighed down by hawkish comments from the Bank of Japan, Governor Ueda, and cautious optimism over Russia-Ukraine negotiations. So we'll get into all of this today. Okay, we'll go thoroughly through our personal fundamental update here at CYPRX, and we'll take a look at the backdrop. So let's go over to our personal update. Again, mind you, you do not want to be part of the crowd that, look at this. This is why most retail traders lose, because they'd rather be distracted. 1.3 million views by someone who's saying that there was no reason for what happened today. Vice versa, look at how many people right now are reading the CYPRX report. Look how many people are choosing education, right? Currently only 5, but I'd say probably over 50 people have read this tonight. So 50 versus a million. Who would you rather be a part of? Once I read this thoroughly for you guys, really ask yourselves the question, who and what community do you want to be a part of heading into 2026? The unknowledgeable, the blind, the people who cannot see the light at the end of the tunnel because they're distracted? Or do you want to be a part of the community, the people who are in the know and have the information to navigate this space correctly? Okay, really consider that. So here we can see today selling across risk assets, crypto included, came from a collision of rising safe haven demand, geopolitical uncertainty, and a renewed shockwave from Japan that unsettled global financial conditions. Even in these pockets of volatility, again, personally, I want to reiterate, not financial advice, but I'm still using discounted levels to position myself for the long game. I believe the true recovery begins in Q2 to Q3 2026, once today's geopolitical and policy uncertainties are finally clear. The first major catalyst was the US ISM manufacturing PMI report that we got this rising during the New York session, which came in weaker across almost every meaningful component. I'm not going to get into all these components to save time. The headline PMI slipped to 48.2, employment cratered to 44.0, new orders fell to 47.4, and prices paid also eased, undershooting expectations and showing no new inflation reacceleration. This is the most dovish ISM profile that we've seen in months, easing demand, weaker hiring, and no price pressure. Under normal circumstances, this type of data would usually lift risk assets because it reinforces the argument for rate cuts. But today, that tailwind was overshadowed by something bigger. Safe haven demand overpowered the data. Despite the dovish ISM print, money didn't rotate into crypto and equities, it rotated into protection. Gold surged, silver strengthened, the yen rallied sharply. When gold, silver, and the yen are all a bid, at the same time, it is a sign that markets are dealing with fear, uncertainty, or a possible liquidity shock. And today, those fears were rooted in Japan. Bank of Japan Governor Koichi Ueda, over the Asia session, ignited global markets after suggesting that Bank of Japan could raise interest rates as soon as this month. This is a major shift for a country that has spent decades keeping rates near zero. You can see that in the headlines. It says here, global equities came under pressure Monday as risk aversion gripped markets at the start of December. Japan were weighed down by hawkish comments from the Bank of Japan, Governor Ueda. Cryptocurrency also contributed to the broader risk environment. This is directly from a bank, right? So again, I'm not sitting here trying to make it seem like I'm being arrogant for calling out somebody that's, sitting here saying, oh, there was no reason today for the shock. There's no reason today for the sell pressure. But if you go read the bank information, right? The information that we provide here at CYPRX, an institutional perspective, this is directly from ING Bank. What does it say? But to be honest, the only solid reason for the dramatic rebuild and the discount for a cut is the Chair Powell has not come out and objected to it. The thinking is that the Williams comment from last week came with a nod from Chair Powell. That's certainly the way the market is viewing it. The move and the probability of a December rate cut was in the tandem with the 10-year Treasury yield up until Friday last week. That changed Monday with a more hawkish Bank of Japan pushing in that new direction. A stronger yen and rising Japanese bond yields could pull capital away from the U.S. equity and bond markets. Bank of Japan Governor Koichi Ueda, Bank of Governor, delivered a speech on Monday that was heard by investors all around the world. The Bank of Japan officially caused a stir in global markets by suggesting that central banks could raise interest rates again as soon as later this month. The remark caused Japanese bond yields to rise sharply, while yields on other global sovereign bonds from the US to Europe and the rest of Asia quickly followed suit. So again, we're not just like making this stuff up. We're trying to teach people why there's always liquidity inflows and outflows intraday and how these things shift sentiment. Japan's bond yields exploded higher. When Japanese yields rise, It threatens the unwind of the yen carry trade, a key source of global liquidity, which again, we went over in thorough detail in this over 45-minute long video. Make sure you guys go check this out. This is over on X and on Rumble. Cannot stress enough, now's the time to educate, not ignore your education. This wasn't just a Japanese story. Ueda's comments immediately caused a global bond sell-off, higher yields across the US, Europe, and Asia, a tightening of global financial conditions, pressure on equities, crypto, and emerging markets. Now, we've warned about this before. A disorderly yen carry trade unwind can create sudden volatility across all risk assets, and today was another reminder of that. On top of that, we also had two geopolitical themes that are still keeping markets on edge. Number one, we had the Russia-Ukraine negotiations, where negotiations have shown difficult but productive. That means progress, but there has been no resolution. And the market hates ambiguity, and until a genuine breakthrough occurs, uncertainty is likely to prevail. And you can see that in the headlines. It says, geopolitical news should remain central. The US has softened its stance on Thursday's deadline for Ukraine to accept the peace deal with Russia. And a new 19-point deal is set to be discussed in the coming days, so that is very important. Number two, we also had tariff uncertainty. Tariff uncertainty is becoming a renewed headwind. Trump's broad import duties have pressured U.S. manufacturing, and the Supreme Court recently raised doubts about their legality. If existing tariffs are struck down, new trade tactics could also be introduced, each capable of disrupting global supply chains and inflation expectations. As one economist phrased it, tariffs and tariff uncertainty remain a headwind. A headwind is something that does not support risk sentiment. Here you can see it right here. President Donald Trump's sweeping import duties have undercut manufacturing, though some segments have been boosted by a surge in artificial intelligence investment. Tariffs and tariff uncertainty remain a headwind right there in the headline. So again, come over here and you look, this person literally with 1 million views said that there were no tariffs headlines or no bad earnings. But in reality, there was tariff headlines today. 110%, without a doubt, there are tariff headlines. Because right now, Trump is in a battle with the Supreme Court under the legality of the tariff implications. And if the court case goes in favor of ruling against the tariffs, it's going to create a lot of market uncertainty that people are not prepared for. So be mindful of that, because we're seeing that surface in the headlines today. And this is the exact kind of environment where safe havens thrive. So the market's reaction. Enough of my spiel. I'm just trying to enlighten you guys on why we saw continued sell pressure intraday in risk assets. Because I want you guys to be elevated. I want you guys to be educated. I want you guys to be empowered. I want the people that follow CYPRX to understand the markets in which they operate in. We are not brainless zombies. We are retail investors with the ability to adapt, to overcome, to really make money from these markets. But we have to put in the elbow grease. We have to, as a team, collaborate. We have to work. We have to improve. We have to elevate our knowledge and not just think we know it all. And most people on the internet think that they know it all. I myself am a student all the time, every single day. I encourage you guys to always be students, always want to learn, always want to accumulate more information than you previously had before. The total market cap briefly dipped into last week's lows, touching $2.8 trillion today before bouncing slightly back to 2.9. The reaction wasn't panic. It was more of a orderly repricing based on tightening financial conditions and rising global bond yields. For me, structurally, nothing changes. If sentiment can stabilize and the market can reclaim and hold above $3 trillion, holding it as support in December, I still personally expect a recovery phase into the December month. The path, however, will not be linear, and I'm not going to sit here and sugarcoat it like it will be, because we are realistic here at CYPRX. So I'm not going to sit here and say new all-time highs, oh my gosh, XRP to the moon, because that's not realistic. Could we see that? Absolutely, but we need to see a path that supports that. So if we're going to see a sustained bull cycle into 2026, 3 major blocks, in my personal opinion, need to be clear. Number 1, tariff and geopolitical uncertainty must ease. No market rallies sustainably into constant headline risk, and that is something that we need to understand. If there's constant headline risk, constant tariff and geopolitical tensions that spark demand for safe haven assets, then crypto is not going to flourish under those conditions. Number 2, global policymakers must manage liquidity risks, especially around the potential yen carry trade shocks. The market needs confidence that the central bankers or finance ministers can contain volatility. Until then, we will constantly see any Japanese headlines that raise prospects of rate hikes lead to flight to safety as investors try to protect and advance ahead of any yen carry trade unwinds. Number 3, rate cut expectations must stabilize. This will likely require weaker inflation, softer labor data, and a more unified tone from Fed speakers. Any upside surprise we need to be mindful of in inflation or employment could push back on the rate cut narrative further into 2026, which could fuel more downside volatility. My final thoughts are that today was not about weakness in crypto itself. It was about a cross-current in global macro dovish US data that was undercut by hawkish Bank of Japan messaging, broad safe haven inflows, tariff and geopolitical uncertainty, global bond yields surging together. These are the type of environments where disciplined investors accumulate and use strategy, not chase. Now, personally, like I mentioned, I'm still positioning for the long run, still building into discounts, and still preparing for what I believe will be a strong recovery in 2026, once the fog of today's macro environment clears and the rate cut cycle begins feeding liquidity back into risk assets. If sentiment worsens, expect more downside surprises. To end with a positive note, if the geopolitical noise fades, the Fed sticks to easing, and tariff and carry trade unwind fears decrease, I expect that to be the foundation of the next bull cycle to form. Either way, preparation beats prediction every time. Hopefully you guys have watched previous video breakdowns here at CYPRX. If you're new here, again, do me a favor, smash that thumbs up button and subscribe, keeping you guys in the loop. Real education when it matters most. Now let's real fast just take a look. Again, I'm not going to go into the nitty gritty of technical analysis, just give you guys some real important levels that I'm personally paying attention to on XRP. So in the previous video, like I said at the beginning of today's call, in update 2 days ago when XRP was trading above $2.20, we mentioned a pullback into $2. We have recently got that to the T of a degree. Shout out to our institutional scalper for the institutional software that he provides our community, because those levels were highlighted days in advance. And now here we are. So again, utilizing that software, we have some highlighted levels. We have an institutional buy dark pool at about $1.90. So ideally, we would like to see price hold above $1.90, even if we were to slightly come down into these levels, liquidate these lows, as long as buyers can trap sellers and defend at $1.90 and keep price above it. Worst case scenario here, even if we did dip below $1.90, as long as we hold it as support, then it's possible that we start to stage a recovery back to the upside on XRP. To the upside on XRP, if we can see price break bullish above $2.33, that for me is going to open the door for a higher price target of about $2.68. I'll make sure to give you guys an update before we reach those levels. So if we can hold above $1.90 or $2, turn it into support. Also holding $2.33 as a support as well, seeing buyers trap sellers become aggressive, sentiment flip back bullish, then that will open the door to stage a recovery back to rekindle most of November's losses at about $2.68. To the downside, if sentiment does worsen, we see any yen carry trade unwinds, or just in general, the sentiment favors safe haven demand and puts pressure on risk assets like crypto. Immediately to the downside, below $1.90, I'm still paying very close attention to the institutional dark pool at about $1.56. Now, there are some levels that our software is highlighting below $1.56 that I did want to just touch a real quick base on for you all real fast. As you guys can see here, below $1.56, just in case, on our radar is also $1.33 to $1.51. You guys can write these down if you like. Again, just set yourself alerts and alarms on TradingView, something to keep an eye out on. We also have on our radar $1.05 to $1.11, and the lowest level delta that is currently popping up with our institutional software comes in at about 88 to 96 cents. So you guys now have downside targets. You have some parameters to the upside that we would need to see a sustainable break and hold above in order to expect any higher price targets on XRP to come into fruition. I will make sure to give you guys a technical analysis update in the coming days ahead. Don't forget that if you guys want access to any of these institutional updates that are inside our private CYPRX Discord, you all can head over to CYPRXtrading.com. You guys can lock in with us if you guys want access to these updated daily fundamentals and you want to be brought into the loop from an institutional perspective as to what's happening in the market in terms of fundamentals, what's supporting or weighing on risk sentiment, and not be the likes of the confused retail investor that's out there just thinking that these markets are random. Then again, we'd love to have you on the team. Many blessings to you guys. As always, be cognizant, be aware out there, and I'll see you guys in the next video update. I do apologize about my travel kit. I'm traveling for the holidays, but I'll make sure to bring everything back into the swing of things in the coming days ahead. As always, I will see you all in the next video breakdown.